I'm Philip Stoughton from My Home to Yours. Welcome to EMS at Sea Level. I am joined by Johannes, President and CEO of Note AB. Hot on the heels of the quarterly conference call and the latest results. And Johannes, thanks for joining me again. Always a pleasure to chat. Let's just get straight into the numbers and have a chat about them, and then we can maybe talk about some of the bigger trends that we're seeing in the industry. Start with the top line. Obviously, sales are down in most areas, as projected and as seen elsewhere in the industry. But I was interested when I looked at the breakdown that your Western European sales had remained quite robust and quite strong compared to the rest of the world, as did the industry sector. So share a little bit about what's driving those slower orders, but also which areas you're seeing perhaps more robust than others.
I will start with the positive then, which I prefer to do. And I think that the underlying demand in Western Europe is remain fairly good. We see big, what I call swings between the segments. If I look at industrial customers, our defense areas in the industrial, and that is growing very, very well with more than 100% so far this year. From a low level, it now approaches maybe 8-9% of our sales. So that part of the industrial segment is going very well. But also other parts of the industrial segment that are a big, how should I call it, the big all traditional industrial customers are doing fairly well. So that we see an increase also on those customers. Moving on to the less positive sides, and which is actually came in weaker than we expected when we closed Q1, and that is especially communication, where we have customers doing infrastructure, for example, for the 5G rollout. Here we see big delays in orders coming from there. Our customers are the ones supplying into, for example, Nokia, Ericsson infrastructure, and those are seeing delays from the big telecom company.
Yeah.
And this is also the reason why the rest of the world, especially in China, were declining, because two of our largest customers in this segment are coming from China, and for those customers we saw a decline, especially in the second half of the quarter. That we also expect to be at a low level, at least for the third quarter. So communication is pushed down a lot. You can always ask yourself why, and why didn't we see this? But we look at what we have in our books, and we are agreeing to customers to push out the orders as long as there's something, as we get something back. So we are pushing out orders, but at the same time we are agreeing on new volumes going forward. So this will be a short-term reduction, but a long-term increase instead. So we try to do that at all times, see if we can seize an opportunity to have a more, should I say, fruitful future, even if that will be a bit of a burden in the current or the next quarter, so to say. We are, as I said before, we don't expect 24 to be the end game. We are looking well ahead, and that is what we try to show when we do a long-term guidance. So in my opinion, I think communication was the one that came in as a negative surprise to me. We knew that green tech was weak. We see that the installation of charging stations for EV cars is at I think a 3-year low at the moment, and that is surprisingly when you see that the EV car sales is up in basically all the regions that we operate in. So it's a bit of a mixed bag, as I call it.
Yeah, it absolutely is. And Johannes, you make a really good point there of when you are behaving as a good supplier and scheduling orders out when customers need you to do that, extracting some value out of that for Note in terms of improving that long-term relationship is really important. And that's where we have to remember that the S in EMS stands for service, and flexibility is part of what you provide as the service. When we look at those overall trends in the market, it feels like some of it is inventory that has worked its way through to the OEMs that was on the EMS books maybe a year ago. And some of it is due to kind of economic and maybe some geopolitical uncertainties that are out there at the moment. What do you think are the key factors there? Like you, I agree that the long-term underlying trend is good, but do you think it's more about that inventory bullwhip pushing through, or do you think it is still waiting for all these elections to happen and some economic uncertainty?
I think I think currently I think it's two or three different should I say reasons why we see the demand is fairly soft in especially in some areas. First of all, I think it's an inventory reason. There was a lot of different if you supply, for example, charging stations. I mean, they go from us to our customer, from our customer to maybe a what we call it a wholesale seller, and then they go to the installers, and there was overstock in all these chains or in all these steps in the channel, and that takes a long time to deplete, because if you then see that the sales to or the installation is declining a little bit, then you're not only going to reduce the inventory to the level you wanted it to be before, you also are reducing the safety stock levels.
Yeah.
And when supply is coming back to be quite easy, then you reduce it even further. So you have a few, how should I say, you get two, three different negative inventory reductions that are occurring at the same time. And that creates a very, very slow demand. So that is in my, well, one thing. And I think also, if you look at the interest rates, if you look at Sweden, for example, with the private leasing of cars, that has declined quite significantly, and the ratio of chargeable cars on that end of the sales is reduced heavily. So that also declines the need of new charging boxes. So there's a link in the chain from interest or interest rates to the price, the monthly rate of what you pay for a leased car and so on. And that also puts a limitation of how many charging stations that is going out. But this will swing back, but it's just a matter of when. We have expected this to come back for, I would say, the last 3-4 quarters, because that has been the expectations from my customers. But it's very, very, how should I say, slow moving.
Yeah.
And if you look at the communication side, I think that this is an area I'm more surprised in that we see delays in, because everyone is talking about that the Chinese part of the infrastructure has to go out, and now we still see that doesn't really happen. So there is what I call an investment debt from the operators, that they need to do this because they have promised to do it, and now they're just sliding on delivering on the promises. So there is. There will be a bounce back. It's just a question of when, and when that comes, it can be very steep. So my view is that we should always position ourselves in a more favorable position when that comes, rather than save so to say the last pennies or dollars on the current quarter, even if that might have a short term hit on our price, but because we are looking to be stronger and stronger over time, and that is so important to me to remember that.
You have to maintain the long game. That's absolutely essential. And I think it's really interesting what you say about inventory and it finding itself in all those different locations along the supply chain. What inventory or the inventory shortages did last year was encouraged OEMs to think much more about longer term visibility. Have they returned to an old way of thinking where they now believe they can order stuff and it will, you'll be able to ramp pretty quickly because they do believe that the inventory is available to them?
Yeah, I mean that is really clear. When you see the market or the supply on components get a bit more tricky, then you directly see that they increase the forecast, especially a bit further out in time, so that we start to, so to say, include that in our ordering patterns. Now when they see that the supply is very, should I say, easy, then you see that the customers are forecasting quite low, so they don't get more liabilities on the components because they assume that we can always chase the component in if they increase more, which is much easier today than it was 2 years ago for
Yeah.
to be clear. So they are
Yeah.
correct in their assumption, but it creates a bit problematic way of forecasting as I see it.
Yeah. Yeah. And it kind of it shifts your visibility just as it has theirs. The improvement in inventory should have driven some more cash into the business. Does that free up more cash to you to make other investments?
Yes, I mean we have our balance sheet is stronger than ever. I think we had a liquidity position of almost 500 million Swedish, and our equity ratio is up to 49%. It's the second highest we have ever had. We were slightly higher when we ended 2020, but we are at the level that is very, very. It gives us a lot of room to maneuver, as I call it. So
Mm.
then that's very good. One comment on the inventory reduction side. I think it was a few big articles in the Swedish financial paper after the second half of 2022, where they stated that the inventory increases were so high in the industrial companies, so that the cash flow conversion ratio from the profit were less than 50%. No one took any real. They were not penalized in the companies at that time, but today I think we see the effect of that because the inventory
Mm.
increase were not happening, so say in the second quarter of 23. It was something that gradually took place from, I would say, start of 2022 and then continued until that. So it was like 1.5 year of constant inventory increases that were
Mm.
piling up to when the supply opened up, then the big change of the behaviors from the customers occurred, and that has we anticipated this to take 2 to 3 quarters. We're now 4 quarters into it, so we were too optimistic in the recovery.
Yeah.
But we still see that the sales out from our customers and are significantly higher compared to what we sell to them in most areas.
Yeah. And does having that cash in a tough market, which not everybody has, mean you're in a strong and potentially opportunist position for the M&A market? Obviously not giving anything away.
No, but I mean this is it's more it's better to be sitting on the cash so you can fund
Mm.
basically all the and any of the acquisitions we have done since I started. We can do maybe 2 of them out of our cash position at the moment
Yeah.
without borrowing more. So that is very favorable. What I see is that the sellers are a bit they want
Still a bit
to
bullish.
they want to so to say not to compare 2024 because they said it's a lost year, so we want to sell on the earnings we did in 22 and 23, and then we should ignore the 24, which makes it a bit tricky because I see 24 as an extension of the last 2 years.
Yeah,
So
absolutely.
if you look at the business, you should take the average of 22 to 24, and then you understand
Yeah.
what the current run rate is.
Yeah.
Um,
Yeah.
and I think so. So our view is that we have had a bit of a harder time to see eye to eye on the price tag for acquisitions, and that will normalize in the second half, I think. But so
Yeah, I
far,
think it will. And I think as the numbers from 2024 become a little bit more solidified, then they have to be taken into account.
yeah.
And it's no longer just an anomaly that we're passing through. So yeah, I think that's critical. You've managed to maintain and in some cases increase profitability, and that really speaks to your focus on manufacturing excellence, but also to the agility you created in the business, the ability to shift with markets as those markets shift in turn. Is that something that you'd always planned and you've seen as a critical part of your strategy, or is that a happy coincidence?
I don't believe so much in coincidences,
Yeah.
to be honest. I think it's you create what where you are, and I think that we have seen companies in our industry do this in slightly different ways. We have taken a measure of being proactive. We are not utilizing equipment until they so to say break. We see if there's better if there's a more efficient way to produce, we try to implement it, even if we have working equipment for the old way of doing it. And I think that is the reason why we have constantly managed to improve our profitability. And I think that when we get through this inventory destocking, we will see that our profitability will come out stronger than ever. That is, in my opinion, the second quarter report shows a lot of the trends. We are weak on top line, but still we are very, very close to be hitting the best level ever. So it's, to me, I see that this trend is very strong. That for those that invest in their production, manage to get the efficiencies out from there, I think they will be the winners when we summarize this slowdown in the economy.
Yeah. And I think, when you look at that, it's the ability to adjust to the slowdown, but it's also the ability to adjust to the ramp back up when that happens. And as you say, that could be quite an aggressive shift in demand that we could see in 2025. So designing the business to be able to deal with that is essential. You've actually got quite a few facility improvements going on at the moment, and expansions. Talk to me a little bit about what you've got planned for the rest of this year and beyond.
Especially with the ones we announced today is the extension of Torsby. This is what I call a quite bad hidden secret, because the local media was out reporting on that, because we have, so to say, started a little bit in the background. We bought off the land some, say, a year ago and so on. So this was a natural step, but we reached an agreement with a selected entrepreneur to do this in recent times. But this will basically, it will double our capacity in Torsby from a floor space point of view, and we will have just over 14,000 square meters. This is going to be one of the Northern Europe's bigger factories, and we're currently operating it with four basically brand new ASM lines. I think we have 6 or 7 selective soldering, and we are increasing that number constantly. So this will be a fantastic site. I think it's a great site to see. You have a lot of the latest technologies, a lot of the latest ways of automated processes, and this will only continue. So this will now Torsby will become. They have been head to head with Norrtälje and Pärnu to be the largest sites in the last, say, 2 years. But from now on, they seems to be overtaking that position quite clearly now. But that's one. That's going to be the biggest one. Then we're looking at an extension in Pärnu, where we have big demand, where we need to do something in Lund, where we have an old facility that will over time gradually become what we call it, multi-residentials in these areas. The factory will sometime in the future be torn down. So we need to do things there as well, and we have also outgrown the Lund facility, so we need to extend the floor space there. So a lot of activities there. But I always say that we should always be able to produce the current quarter next year where we stand, because that can come much earlier than you expect. So when we look a year ahead, we see very strong numbers on the top line, and we try to build our capacity in the equipment to fit that run rate, because then we only need to add operators to facilitate it. So we are always looking 1 to 2 years ahead when we look at capacity and in terms of building and equipment. That's very important to remember. So we see a very good demand coming back. Otherwise, we would not have taken these massive investments as we do. So I'm looking very positively about the future, and and I think that everything we do is to position ourselves to be winning the game in the long run.
Yeah, and I think that's really important. And what you're doing is also showing huge confidence in Scandinavia, where a lot of those investments are happening. You mentioned Torsby, and that's really a flagship facility, very much state of the art, very high level of performance, and actually being able to increase the size of that and increase the performance is is exciting. I look forward to visiting
Yeah.
that. Part of expansion is the acquisition of talent. Um, One would imagine the market for talent is a little bit better than it was perhaps a year ago, as the market has slowed somewhat. Are you able to recruit the talent you need for the growth you got planned?
Yes, I would say that we have struggled. Where we have struggled the most has been in UK, where the it has been a limitation of resources, and they have also increased the minimum salaries quite high, so which has
Mm.
put a lot of salary obstacles in how you run your business. But I think we're through that, and currently we have the resources that we need for those factories. Sweden, Estonia, we have always managed to recruit what we need, and so we have not seen that as an obstacle. China, we have managed to keep a very loyal workforce, so we have not had big swings in that. When you measure China, you always see quite high turnover, but it's often the last employed that are leaving. So you say that you have 80% is stable, and
Yeah,
yeah.
20% that
And the last
fluctuate.
20% is what you constantly, so to say, recycle, if you put it like that. And it's more
Yeah,
that the employees leave as often as we have them to
yeah,
leave, if you put it like that.
yeah,
So it's more of a natural cycle there. So
yeah,
I think for us, we have not had any big issues to recruit talent, as I see it, not even in 22 and 23,
yeah,
when it might have been more. We have not lost any sales. We have not lost any development programs that we're doing due to that. So I think we
yeah.
have been succeeding quite well in this area.
Yeah, and over the last 5 years, you've made really big strides in terms of your revenue per capita. So that's been impressive, and you've never been shy of investing in automation, and that's a big part of mitigating that. Last thing I just wanted to check in on was, do you think the supply chain pressures have alleviated, and has your relationship with your suppliers improved post the supply chain crisis? Have the component distributors stepped up and been able to help out and perhaps been more creative with solutions?
I would say that our relationship with our suppliers, my view is that it has improved. We have got some support from them. I think that the shortages really showed one thing, and that is that it is the manufacturers that are basically deciding on who's going to get the components. The
Mm.
distributors' mandate
Are
over
just stuck in
the
the middle,
volumes
yeah.
is fairly low. So my view is that we need to strengthen our relationship to the manufacturers, even if they are supplied through any of the distributors like Arrow or
Yeah,
so. So for me, that is the key here to create these natural relationships to them rather than the distributors. That will be very important when we reach the next shortage,
yeah,
which
yeah, the next
everyone
one.
is suspecting that it will occur a year or two down the line.
Yeah,
Um,
yeah, it's kind of inevitable, isn't it? And last question, geopolitics seems to be driving us a little bit away from globalized models to more regional models, more manufacturing in region for region. Is that something that you think about when you're thinking about your long-term footprint?
yeah, definitely. We are seeing that. The expectations is still that the manufacturing of electronics in Europe will grow faster than the world. Europe and US is predicted to be the fastest growing in the coming, say, 3 to 5 years. So that is for us very important. Um, I think that everyone talks very poorly, if you put it like that, on China. I still believe that China is probably the biggest manufacturing country in the world still for EMS services by far. So it's even if it has declined in value, it's still the most important production country in the world by far, and that is something that we often forget. So we're quite pleased to still have a unit in China that is fairly sizable. Then I think that Asia is moving. There's everyone talks about India at the moment. That but they have talked about India for the last 20 years, I would say. But the infrastructure is probably getting better and better, and nowadays it could be a country to consider. But also US, I mean, US is it's likely that their protectionism will increase rather than decline. So this is a huge market, and we need to be there. So that is still one area that we are very keen to look into. And I think
Yeah.
the the talent or to attract talent is getting slightly easier now compared to the last
Mm.
couple of years. Also, when their economy is softening a bit, so
Yeah.
so it might be the timing starts to become right to more explore that opportunity.
Yeah, I absolutely agree with you. I think China, we have to remember with China that it's a huge consumer market in itself. So for China is important as well as for elsewhere. And you're absolutely right. A country that has put a 100% tariff on electric cars being imported from China looks like it's going to continue to be or to pursue those kind of trade initiatives and trade control. So yeah, I think that's essential. So I think increasing and building that region for region global footprint is another phase in the long-term plan. And one of the things that I've been taken with in our conversation is that whilst you're thinking of what you need to do in the short term and creating the agility to do that, you've still got your eye on the long-term price. Hugely important.
Yeah, that's a good
Fantastic.
summary.
Yeah, Johannes, thanks so much for your time. Thanks for talking to me again, and I look forward to chatting again soon. Thank you.
Yeah, same to you.